The energy sector is in focus now because of the war in Ukraine and all sanctions that came as a result. Since the rising energy prices indirectly add to the already high inflation, we need to learn to hedge against this to keep our buying power. One of the biggest names in the energy business is ExxonMobil, ticker XOM. Disclaimer: I hold some Exxon shares via my favorite energy ETF, XLE. Exxon was originally founded in 1882 by John D. Rockefeller. Back then, the company was called Standard Oil. It grew so big that it basically became a monopoly, so the US Supreme Court ordered Standard Oil to break itself into 34 companies. The branch from New Jersey became one of the biggest and by 1976 changed its name to Exxon Corporation, then united with Mobil in 1998 to create the biggest oil company in the world. Since they are the largest refiner and marketer of petroleum today, I think it is beneficial for any investor to have a basic understanding of this company. In just the last 1 year, the stock price has increased by about 65%. This is a big increase in general, but compared to its already huge size, this is even more impressive. Their current PE ratio, or share price per each dollar of earnings, is 10, which I would say is industry average at similar sized companies. They pay a dividend of 3.87% to investors. Their free cash flow is about 16 billion, while their long-term debt is roughly 43 billion. This means that they can pay their debt off in a little bit more than 2.5 years worth of free cash flow, so they are keeping their debt in check. As you can see, as Chinese real estate developer Evergrande, a gigantic size doesn't mean low debt. Other than the US, Exxon extracts oil and gas in well-diversified places like Indonesia, Papua New Guinea, Guyana and Qatar. On the gas front, they are present in both the PNG and LNG businesses. PNG means piped natural gas, like how Russia is transporting a major part of Europe's gas supply. LNG means liquefied natural gas, where the biggest players are countries like Australia, Qatar, and the US. Exxon restructured this year into three major divisions: Upstream, which produces oil and natural gas, Product Solutions, which makes fuel and chemicals, and Low Carbon Division, which currently focuses on carbon capture and storage to reduce the company's CO2 emission levels. The ESG, Environmental, Social and Governance score of ExxonMobil is 59, which is a bit higher than the industry average of 56. It is important to mention that many investors are warning that this measurement can be misleading because it contains subjective metrics. Subscribe to learn more about money and how to make it.